Today I'm going to share with you my day trading strategy and how I tend to scalp 2 to 5% really successfully and compound and grow small accounts into large ones, and how to find opportunities in the market that are not only profitable and consistent, but something that is very repeatable and you can put into a strategy for yourself, okay? So you can either take some of these ideas, put them into your own trading strategy, or you could even try my strategy and see how it works for you. I'm also going to hopefully show you how taking profits very early in the market can actually be a really good thing, and how you can basically use that to increase your account in smaller increments of say 2 to 5% and or 2 to 10%, and how you can use that to grow your account exponentially. Okay, this sort of trading technique and the way that I trade is for people who like to get in and out of the market quite quick, and you like to be quite an active trader and quite a reactive trader. Okay, so if that's something that you want to hear more about, then go ahead and give me a like down below, and give me some comments with what your favorite techniques are, and if you tried this, how you found it. Okay, so let's get straight into it. So the things that I'm going to show you is I'm going to show you my main indicators that I use, how to set everything up, and I'm going to show you some examples past and present, and implement this onto a chart so you can see how I do it. I've obviously got 2 trading accounts in that. One of them is essentially my spot long term, that when I get major dips like down here and like over here, okay, I'm looking to add to my spot account and leave that in there for the long term. And then I've got another trading account where I look to, trade the intraday and intra week, and basically be a lot more active in my trading in that in that account. Okay, so let's get straight into it first. So the first thing that you want to do is we want to basically know what we're going to be trading, okay, and how and when we're going to sort of set up our trades. So what I want you to do firstly is basically get a list of coins that you want to trade. I recommend usually doing something like the top 50 that have a good amount of volume, liquidity, and try to avoid any sort of big shit coins, okay? And then you can maybe put a few of your top 100 that you maybe like to trade, and they're still sound projects. That's totally fine. But once you've got your list, okay, what we're going to start doing is we're going to basically start marking off levels, okay, where we can absolutely, with a high degree of confidence, say, do you know what, I think that at this place or at this range, that I think that I could definitely scalp. There's a high degree of confidence that we can scalp at least 2 to 5%. Okay, and it's almost like having a mentality of high time frame TA, but almost short time frame profits. Okay, so where most people might be hanging on to trades for say like 10, 20, 30% and aiming for much higher, what we're going to be doing is essentially aiming for, a really quick get in and out, and absolutely bank the really, really high probability trades where we can go, do you know what's the chances of us banking say 2%, 5%, 7% here, and then getting out and then just waiting for the next opportunity? Because the way that I'm going to show you this, you'll see that there are so many opportunities in the market. Okay, so this is what we're going to do. The way that I trade this, okay, is I will use essentially 3 or 4 indicators and basically stick to those, so I can keep things really simple. And for me, what works really well is I will use trend lines, I will use RSI, and then I'm going to use ranges and basically horizontal support and resistance to basically give us an idea of where we can enter and exit trades. Okay, so the first thing that we want to do is we want to start setting alerts, like I said, at levels where we definitely have a high degree of confidence, and to me that's usually like the extremes. Okay, so the first thing that I'm going to do, okay, is I'm going to get up my RSI, okay, which is down here, and what I tend to do, okay, to give me that first indication that we're either overstretched either on the long side, or if we're getting oversold here, where we can start looking for longs, okay, is most people will use the RSI as a 70 for an overbought region and a 30 for an oversold region. But what I tend to do is I tend to set alerts for all the coins, okay, at the 80 level and the 20 level, okay, because this is basically moving standard deviations, more extreme on either side, and this sort of tells me that, hey, look, if we're up in this region at this 80 region, you know, you can expect maybe some sort of pullback or some sort of pause in price. And then maybe if you're down here in the 20 region, you can expect some sort of bounce in price. Okay. And the time frames that I use the 15-minute, the 1 hour, the 4 hour, and the daily. Okay. Now, if you hit any of these on those levels, for me that is a high degree of confidence, especially the 15, 1 and the 4. You don't necessarily need to wait for the dailies because or the weeklies or anything like that, because sometimes those can take a long time to play out. So usually you're going to be working with the 15, the 1 and the 4 hour, and I would literally mark off here like this, add alert, RSI, 80. Okay, you might find some other points that you like. Maybe you find some coins that maybe have a lot of confluence points, to say like 85 or 87 or whatever, but I like to keep things nice and simple, 80 and 20. Okay, in this way, when you're entering a long position at 20 RSI, you have a lot more confidence that, hey, look, maybe the downside here is a lot more limited because we're already like fairly overstretched, so that gives you good entry points. Okay, and that's going to give you confluence to start looking for entry points. Okay, so once we have set up our 80 and our 20 RSI on our different time frames, okay, we will have already also marked out, okay, and you can just set this, so this is basically it's a standard, so you don't even need to like, you know, monitor this RSI. You can just set this alert to just be continuous, and every time we hit that level, great, you have an alert going off on your phone. Okay, so the next thing we want to do is we want to start looking for major trend lines, past and present. Okay, and when you're actually drawing your trend lines, okay, one thing I'd recommend is don't start doing that thing where people just they almost like make their lines fit, right, and they start drawing their trend lines like through bodies and candles, and then they make it fit and they go like, hey, look, there's my trend line. No, you can't. You need to have some sort of rule. Okay, look, you either do it from the bodies, which I don't like. I tend to just do it from actual price, and I tend to get really good reactions at those levels, and you tend to find that tends to be very consistent. Price for me is something that happened. Okay, wicks count. That doesn't mean anything. Okay, so that, you know, just because we wicked up there that we can't use that price, like it's invalid. No, that price happened. Okay, on some time frame, you'll probably be able to see that as well. So this is how I draw my trend lines, something like that. Okay, and what we're going to find is we've got these trend lines here, which are like what I would call the active trend lines, where we can see that these are the trend lines that are outside of the current price, where we're looking to either find resistance or support to either break from. Okay, and then you might have some old trend lines which are very important, like this one, for example. Okay, and where we basically came out, broke out of this massive trend line, and then we've come down and retested this as support. There's always going to be some subjectivity to trend lines in the way that you draw them, and you can see that sometimes it's not going to be quite absolutely perfect to the dollar. You might be like 0.5% or 1% out, but if you can see that there's a clear trend here in that, you know, we've broken out of here, but we can't, you know, we're using this this line as support multiple times, then, you know, you're going to be able to see that you know, we can use this trend line, and we can do this with other key points as well, where we might have maybe like a trend line like this. We've got multiple touch points. So if you're using older trend lines and you're keeping them in place and you're putting alerts on them, then just make sure that they do have basically multiple touch points, and you can see some sort of confluence and reasons why you know, you want to use that line. So that's what I would use, and then I'd mark out areas. So firstly, I will actually add an alert on Trendline, and you can do it like this, right click, and then you can call it whatever you want. You can call it BTC Trendline, okay, and then you can basically create it, and then that will go to your phone or your email, or however you have set that up. And then essentially what I'm going to do is I'm going to go, right, because I'm on this higher time frame, 412 daily hour, okay, sorry, 412 or the daily, and I'm going to look for areas where of value, where I think, okay, where do I think that I could make 1% and bounce off there? So let's say, I would say, you know, I would be going long over here, okay, I'd be taking some shorts over here at resistance, okay, and maybe at old trend lines, let's say we have this trend line connecting here, maybe if we made a fall down to here, I'd be looking to take longs. Okay, so you can do that with trend lines, and obviously your old trend lines that you have in place, you can do exactly the same. Basically sell at resistance, okay, and you want to buy at support. And then in confluence with that, I tend to have key trading ranges. So you want to find these ranges like this, where we have basically highs and lows, and we're basically trading within it, okay? And you can see this on quite, like, you know, multiple time frames. You can sort of catch these out, okay, and basically just trade the ranges. And a lot of the times you'll find that you're in confluence with a lot of other indicators, okay? So if you look to your left as well, you'll see a lot of areas of horizontal support resistance where you want to mark out, and you can basically add alerts here, 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 wherever it is that you're sort of trading, okay? And essentially you'd be expecting on some sort of high time frame that once you reach a certain level, that let's say we reached up here, you maybe might be looking for shorts if you just want to play the range, okay? So let's say we broke out of here and we came up to this range here where we basically just have a little pause in price at 51,700. Then we might, you know, drop down just quite easily 1, 2 or 3%, and you can dial into that on a lower time frame. I'm just going to get rid of these trend lines over here, and you can see sort of how that might look. So like I said, let's say at the minute we have something like that in this trading range, and essentially just looking to play the bounces here and there, okay? And you typically find that you get this confluence, okay, with price and your other indicators. So typically when you're oversold, for example, let's say we get oversold on the hourly or the 15-minute, it's likely that we're going to be down in this green region. So it's telling us that we're overstretched to the downside, but we're also probably going to be coming into a range of support where we've historically seen buyers step in, okay, and we're close to trend lines and whatnot, so you have to be looking for buys, okay? You never, like, don't trade breakouts. I would never do that, okay? I'd only trade retests, but that's for like another video. But you know, you can't be like, you don't go long up here, okay, when price is like going up and it's going green, right? You just basically be really objective at the start of the week. You basically sit down and you mark out all of these key levels, and you're going to do this. So you're going to go here at this trend line, here, and you're going to find all these different areas, obviously within certain structures like this one, okay? You're going to be able to find certain areas over here, for example, where we've had clusters of resistance before, okay? And you can see support, resistance, and usually when it's flipped, support, resistance, and vice versa, okay? So something that you want to be looking out for. And if we have a look at this with some other coins, let's say we take Solana, for example. I haven't even had a look at this. This is just like a complete naked chart for me. But essentially, let's have a look here. Can we see anything on a higher time frame that we're able to trade? And we can see that, first of all, we want to get some trend lines in there. So we can use this trend line over here, and we can connect these two trend lines over here. So we'd be looking maybe some resistance up here for some shorts, and maybe some longs over here, okay? And can we find any areas or any ranges to trade? And we can see here immediately, okay, we've got multiple areas of support where we're having buyers step in. So anytime we reach here, you're going long, okay? And we can see some other ranges up here, okay? So maybe, and that's confluence here, you can see here where we had support before, okay? And then we came down, and now we've tested this as resistance a few times, so that would be an area to look out for to take shorts. So if price suddenly went up to here to like the 186, 187 level, maybe you find that your RSI is sort of stretched on some time frames, and again, rinse, repeat, and you just mark off all of these levels. You go here, and you can just do this for about, like, maybe set about 8 to 10 alerts per coin. But what you have to do is you have to go through each coin and put in the time and put in the effort, okay? Like the way that most people will send me questions, or you see a lot of questions online, and they'll just basically be like, when is Bitcoin going to 1,000? Should I buy this? Should I buy that? They want instant answers now. They don't want to put in any of the work, okay? You need to get used to basically going, if you want consistent profitable results, you need to basically put in consistent effort, right? Daily, and get good at it, right? If you want to get good at something, you will do it, Okay, I promise you, right? If there's some sort of computer game that you really wanted to get good at, right, you wouldn't just keep asking questions and what you'd basically just keep playing it. You keep doing it until you get good at it, right? You know, so it's trading is no different, right? You need to get good at it, right? Trading is a skill, and it's also a little bit of a dark art in itself as well, where you need to sort of be quite fluid and sort of have experience in the markets and whatnot. But you've got to put in the time, right? But if you put in the time, you will be, successful. Okay, and you will be a successful trader. So that's basically how we're going to do that in terms of using trend lines and key areas of support resistance. And you can do this. We just get rid of this. You can do this on shorter time frames as well. If we look at this on the hourly, we can have a look. We can see this area that we marked out and this area up here. And basically just trade the ranges as and when you get there, okay? And I'd also mark out key Fibonacci lines of major impulses, okay? So I'll show you what I mean. And I'll usually go with and work with the 1.618 because that's where we typically tend to get a lot of reaction and confluence. So let's say you had this impulse here, right? I'd be looking, there you go. All right, I typically trade anywhere between here, the 382, 0.5 and 618. So this is another thing that you can add. So on the major impulses, okay, you can essentially set these fib levels and just go mark them off, mark them off, mark them off, and just see if you get in a reaction there. So you can see at these key fib levels on sort of Solana, for example, when we got to 382, there was no reaction, right? But here we can see that we're basically getting some kind of reaction at the 50% level, and again at the 50% level, okay, which would have again in confluence with horizontal support resistance. So we can use fib levels and tie these indicators together to give us higher probability and higher confluence, okay, and confidence in our trades. And then obviously here again we got a exact reaction over here at the 618, and maybe a little reaction here where you could have probably taken this for a little bit to the upside, but you get the point, right? And you can do this with, as long as there's a major impulse. I'd say when you zoom out on like the wider time frames, you can use that, okay? So let's say you take some of the other impulses, even just this impulse, okay, when you got the correction after that impulse, okay, and you're correcting down, see, you're looking for key levels. This is why I always look for this 0.618, okay? It's the golden ratio, guys, right? It's the one where you typically get the most amount of buyers stepping in, okay? And the same thing can be done on the reverse. I haven't checked this one, but this impulse down here, we're getting confluence, we're getting some sort of reaction here. We haven't quite made it to the 618, but you get the point, right? Just mark off the levels. Sometimes they're not always going to get hit, but you want them there just in case they do, okay? And again, you're going to have this confluence where you use RSI, trend lines, and whatever other indicators that you want to use, but you'll tend to find that when you get like 2 or 3 merging together and it's giving you a screaming buy signal, don't worry about, on the price, on the chart, everything looks red or everything looks really green. Just take the trade, be confident with it. If it doesn't work out, maybe learn where you went wrong and just go again, okay? It goes without saying that you do want to make sure that you have your risk management in place when it comes to trading this market. So that doesn't mean that just because you're looking to come in and take high time frame visions with smaller profits and get in and out of lower time frame profit margins, right? You still want your risk reward, right? And remember, when you're doing your risk reward, you definitely either want to be one of two things. You need to be either right more wrong than you are not, so you have a higher hit rate, okay, or your risk to reward needs to be higher to the reward side, okay? So you always want to be staking more, basically you want to be trying to gain more than what you are losing, okay? So let's say you enter a trade, I don't know, you went short up here and you're trying, your stop loss is say like 4%, then maybe you can at least try to gain like say 5, 6, 7% and then get out, okay? Or be right more often then you are wrong. So one of those two things. So you always have to make sure that that stays into the trade, okay? And essentially that's how I would do that. And sometimes I'll use secondary indicators, like I'll use some key EMAs like the 21, which is a key momentum indicator, or maybe some of the higher time frame fib or 100 or 50 or 200 day moving averages. I will put that on there, but you don't want to go like sort of paralysis by analysis. Just have your main trend lines, have your main ranges, and I bet you that if you mark this off on so many of the coins, like you do 10 or 20 coins, right, you're going to be in the business. You're going to get loads of alerts, and then when you get out of one, you're probably going to have another alert go off onto another coin, okay? And you take that and you just keep going, you keep bouncing from trade to trade. You're of course not going to win all of them, okay? That's not what trading is about. You need to get used to being wrong quite a lot when you're trading, okay? But essentially, when you come in and you get out of one trade, there is always going to be another trade, okay? I guarantee you that if you do this and you mark off all of these key levels and you stick to them rigidly, okay, because your analysis is like, hey, look, my analysis is telling me that, let's say we get into this region for Sol at 200, it's a round number, yada yada yada, all of these regions that you can capture 2, 3, 4, 5%, great. Doesn't matter if it goes on and drops. If you went short here and it dropped another 50% and the trade left, you took profits, right? There'll be another trade. I guarantee you there will be another trade, okay? So just look to trade these coins for support, resistance, and those main indicators, okay? So hopefully that's given you something to think about, and some strategies that you can implement into your own plan. If you've got any questions, like I said, drop me a little comment down below. Let me know what you think about this strategy, and if something that you're going to be implementing. And yeah, and I'll catch you in the next video. Peace out.